Good day, and welcome to the DRGR Question and Answer Session conference call. Today's conference is being recorded. At this time, I'd like to turn the conference over to Janine Cuneo. Please go ahead.
Thank you, and welcome, everyone. As the operator mentioned, this is the DRGR Q&A. We have with us today Mark Mitchell, Hunter Kurtz, John Laswick, and David Noguera from HUD, myself, Janine Cuneo from ICF, and we'll also have a couple other people that might be chiming in, Ryan Flannery and Jim Reardon from HUD as well. So we have a great full deck of both DRGR experts and policy experts today. I'd also like to let you guys know a little bit about how the day is going to go. We are going to touch on, for just a few moments, about 15 slides around some of the advanced functionality that's come out since 7.3 release, just to go over an item or two, as well as talk about where we're seeing some folks still struggling with some of those releases, just to give a little bit of a refresher slide or two on that. And then we'll jump right in and do our best to answer all of your questions. Justin, can you go ahead and let people know how they're going to be asking questions today?
Sure. Today, we will be taking questions following the presentation slides, as Janine mentioned. You may ask your questions one of two ways. First, you may ask through your live meeting window by changing your feedback box from green to purple to let us know that you have a question. The feedback box is located in the upper right-hand corner of live meeting. Secondly, you can ask your question via the phone by pressing *1. If your question has been answered, please remove yourself from the queue by pressing *2. You may also write your question in via the live meeting Q&A box. Once you finish asking your question, please change your feedback box back to green. Thank you, and I will now turn it over to Mark Mitchell.
Thank you. So real quickly, we're going to actually, before we just go into the general session of questions and answers about any DRGR issues folks might have, we're going to cover a few, again, of the major changes from Release 7.3 and some of the other advanced features that folks typically have problems with. So some of those are going to include how budgets work now, the changes to budgets, that since now we're dealing with program funds and program income on the budget side. We also have program income accounts that folks can use, and we'll cover about when and why you should use program income accounts. We'll touch on the new changes to the voucher revision screens where you're revising vouchers across activities, and also review the available amount calculations for program income on a voucher. So we have a lot more information that you can find out about available amount calculations than we had in prior releases. One of the ongoing issues we continue to have, again, is the QPR race ethnicity data that goes in, and so we're going to talk a little bit about the source of that data and what you need to do to make corrections. And finally, the last topic we'll just review very briefly is what's the difference between a draw in DRGR versus an expenditure. So again, some of the major changes that we have in Release 7.3 have to do with budgets. And so now project and activity budgets are supposed to include program funds, the grant funds, but also program income. So as part of our release back in December, we actually inflated some of them when we knew that you had already had program income in your activities. So we might have adjusted some of your activity budgets, project budgets, and also the estimated program income at the grant level. So one of the things that we're finding that folks have confusion, though, is that we asked for folks to actually estimate how much program income at the activity level, project level, and grant level you expect to get and spend over the next couple of years. So one of the main sources of confusion we're seeing is that some grantees think that they're supposed to identify the program income effects on budgets for just the program income amount that they have right now. So again, we just want to reemphasize that we're talking about when you're making these adjustments, that you're identifying how much you think at the activity level that you're going to have in program income, and using that to inflate your activity budgets, your project budgets, and your estimated grant. So again, the basic math rules we have are project and activity budgets include the program funds and the program income, and the total project budgets then will include again, this program income. And so the amounts are going to be inflated overall. So it's a very different thing, you know, than our prior where it was only the grant funds. So one of the things that, to make these adjustments, one of the main things that's helpful to do would be to run something that's the activity level program income reports. I think they're the Financial Report 5 series. And again, come up and identify those amounts in that, you know, and see here's how much we've received, you know, in each activity to date in program income. So over the next couple of years, over the life of the grant, this is how much we project we're going to have. You use that to inflate the activity budgets. And before you can do that, though, you'll have to also inflate the estimated program income revolving loan funds here on the Edit Action Plan page, and then also inflate the project budgets in order to accommodate those increases in the activity budgets. So basically, before you make any changes, the best thing to do, again, is run those MicroStrategy reports, calculate activity level, project level, and then grant level. And then when you enter the data, you're going to reverse that process. Enter the grant level, project level, and then at the activity level. So one of the other advantages, though, that we have is some of the errors we'd have in the past, you know, at the project level was projects budgets would accidentally get inflated above the amount of the grant. So the fact that we have this estimated program income revolving loan funds amount at the action plan level allows you to work with that and resolve that issue much easier than it was before. So basically what you're going to end up doing is if you get this message on the edit project page where it says grant amount plus estimated PI is less than the total budget amount of all projects, what you're going to end up doing would be to increase the amount of estimated program income revolving loan fund on that edit action plan page to at least accommodate the amount that shows in the negative amount under available for project budget. So once that's done, one of the things you can do then is do the search project in your edit action plan module and use that to identify what are the actual project budgets in your action plan. So sometimes folks will actually accidentally use that adjust project budget button on the edit action plan activity screen. And that's typically the area where folks end up having the most problems with their project budgets. So again, we did make some adjustments to project budgets. You know, if you had program income that had to be accommodated back in December when we did release 7.3. So again, I urge you to look at those project budgets, use that search project function, review them, and then if you're getting this error, again, it's pretty easy to fix this now. You used to have to request our help a lot of times, but now you should be able to handle a lot of those errors on your own using the estimated program income amount. So once you get those project budgets fixed, though, you want to make sure and deflate your estimated program income revolving loan fund back to the correct level. So this next slide actually just shows, again, these steps that we were just talking about, temporarily inflating the estimated amount, making the corrections, and then deflating the estimated program income revolving loan fund on that edit action plan page. Another common question and common issue we have right now is on the program income accounts. So back on our December 6th webinar, we talked about, you know, when we should create a program income account. So again, the typical rule is that you're creating a program income account only if you're a state government, if you're allowing your local governments to retain the program income, or if you're an urban county or a local government, if you're allowing a subrecipient to retain program income. If you are not allowing folks to retain program income, if you're asking them to return it, you do not have to create a program income account. Just because you have program income doesn't automatically mean you create a program income account. So we're seeing some confusion with grantees. So then one of the errors folks are running into is that when you're creating a program income account in the drawdown module, basically all you're doing is just identifying what organization is it. Once you select the organization, you're picking the activities that of the organization that actually this program income account applies to. So one of the error messages you might see is program income account could not be created successfully. The total receipt amount is less than the drawdown amount. So what's happening is DRGR is actually checking program income received for from receipts and program income dispersed. So it's not going to let you create an account if there's an imbalance here. So the amount of the amount that's off will be shown in this error message. So in order to kind of troubleshoot this, then one of the easiest things to do would be to go look at Financial Report 5B and make sure that the total amount of program income received and program income dispersed, for each activity, and then the total, adds up correctly. Because one of the typical things is that you might have recorded a receipt on the wrong activity, or maybe you hadn't recorded a program income disbursement in the drawdown. So typically it's just that there's an error. And so those errors will have to be corrected before you can go in and create those program income accounts. So once those errors are fixed on the receipt side or the draw side, then what's going to end up happening is there should, you go back into the program income account page, and then you should be able to make those corrections. If you still have problems with it and you're not able to figure it out, again, like any other issue, try to work with us in DRGR_help@HUD.gov. Send us a copy of your financial report 5B and send us a screenshot of the error message, and then we'll try to work with you to see if there's something we can figure out on our end. So the next one, and this is the new report, Financial Report 5D, actually shows the list of program income accounts that have been created. So the prior report shows at the activity level program income received and dispersed. This new report 5D actually will show at the program income account level. So again, if you don't have any program income accounts, in DRGR, when you're looking at your vouchers, you'll see things that say a general account. That just means it's not been assigned to a revolving loan fund or a program income account. So that kind of information at the unassigned won't show up in this report. This report will only display things if you have created program income accounts. So one of the next things we're going to talk about, again, is also revision of vouchers. Can you change a voucher if funds were returned or if the drawdown was recorded against the wrong type of activity? So the report shown here is actually the activity level program income report. And so one of the things you might actually look at instead of just activity level report, and certainly not the program income one, would be actually to look at the voucher reports that we have in MicroStrategy. So the typical reasons for making a draw revision would be that there's a billing error. It could be just a simple one of we recorded the draw against the wrong activity. A lot of times we also have folks that create two activities for a particular program. You might have a housing rehab LH25 and a housing rehab LMMI. And so a lot of times you might not know the income level of a household or, for a particular property that's been acquired. And then so a draw has been made, and then later on you need to correct it. So you might move the draw across activities for that reason. HUD might have also asked you to restructure your activities. And finally, you might have something that was an ineligible draw. So if that's the case, sometimes those draws are offset. Sometimes the money's wired back. So the screen looks a bit different now than it used to before Release 7.3. The screen actually allows you to not only identify multiple activities, whereas before you have to do multiple revisions, one at a time. Now you can create multiple revisions. The screen also shows the available amount at the activity level. And then we also now require a revision reason. So there's a drop-down category that says things like ineligible billing mistake. And then there's enter a reviser comment. So the reason for this is that anytime you revise a draw, that's going to be a high-profile activity, for the IG to look at. And so you really want to take advantage of these comment fields and then identify what was the reason for these revisions, so that if someone's looking at this, they'll have a kind of a full history here. So again, this kind of shows the easiest way if you're creating a draw and making it a change across activities. If you actually are wiring money back because you found out, or HUD has said something's ineligible, or maybe one of your beneficiaries has returned funds, you're going to actually still have to do a revision. So one of the most confusing things about those is that when the money is wired back to locks, it will not automatically go back to the activity. blocks doesn't know anything about activities. So it'll show up as a collection. And so if you're searching for a voucher to do a revision to identify which activity that the draw will be reassigned back to, so you can increase your available balance, the easiest way to do that is put the completed drop-down in the line item status. You can do collection and transaction type. And when you do a search, you'll see a negative amount. You'll see brackets around the drawdown amount. And the line item status will actually say completed, needs revision. So, again, this will take you back to then, once you hit maintain, you should then get to another link that allows you to go back into that revision page, and you'll fill out the same page. So whether or not you're offsetting a draw, whether or not you're wiring funds back, in both cases, you're going to need to use that revised voucher screen. So again, we talked a little bit earlier about program income and if there's an available balance issue for establishing program income account. You might also find out that there's an available balance issue when you're doing a drawdown. So if you're going to make a change to the program income receipt, if you've identified that it's assigned to the wrong activity, you're going to go back to the search edit receipt under the drawdown module. And what you're going to have to do is go ahead and edit the receipt. And so you you're going to be changing the drop-down on the activity number. So it's not a big process. So one of the things to remember, though, is if you do change your receipt date for something that's older than in a prior QPR that's been unapproved, there will be a notice that goes out to your CPD rep and to grantee admin users that will kind of notify them that the program income for a prior approved QPR has been changed. So it's nothing to get too worried about. We just kind of want to let folks know that data that was previously displayed on an approved QPR has changed. So how do we then go about figuring out if there's an available balance issue? One of the things that we've changed a lot on the page, it used to be that when you calculated available amount on the draw page, the available amount, if it was program income, was, again, at the grant level, and the available amount, if it was program fund, was at the activity level. So one of the things we tried to enhance the system was to make little alerts in the status. You'll see a yellow triangle with an exclamation point in it. And so I don't think a lot of folks know yet, but if you actually put your cursor over that, you should get a little pop-up message that says, what is the issue for that particular line item? And so in this case, you see the example, it says, use the program income account or revolving loan funds before program funds. So the available balance issue has to be with that you have to use the program income first here. So one of the other items we have, again, is you can go ahead and use that available balance calculation and click on that and see what is the actual calculation that DRGR is using. So one of the things that's a little clue here, though, is if you get amounts that are different in each row, typically the issue is going to be the available balance on the activity. If you see a repeating value, like say here the second row shows 400,000, if you see 400,000 multiple times, a lot of times it might be that that's the program income account. It's the availability of program income, and so it's not until you make those adjustments in program income and disperse the program income fully that sometimes you can actually get at the program funds. So it's a little confusing. We're going to try to make some enhancements because right now sometimes you're having to actually work through that program income and then create a separate draw for the program fund. So we're trying to move towards where, again, it's a little easier and you'll be able to refresh those available amount calculations. But the key thing is, again, once you click on that link, is you can see, again, how did those calculations get made. And so in this case, you can see that the program income account, it's actually, if you look, there is actual program income account that this activity is assigned to. So the available balance under that program income account for program income is $25,000. So any activity under that particular program income account, that $25,000 has to be spent before the grantee will be able to get at the program funds. So if the issue is, again, the available balance, a lot of times it's going to be that the budget, at the activity level, the total funds obligated minus the total funds drawn there's not enough difference to make an available amount at the activity level. So, again, it can be very confusing when you're just looking at the voucher, and I encourage everybody to use those available amount calculations to figure out what's going on. So the next slide, again, basically goes through and shows what are those math rules that we just discussed. And so we'll have, of course, copies of the slides, available. And this just goes through it. So, again, program funds, the available amount is, again, determined at the activity level. But it's affected by also if you've got program income that's unspent. So the program income fund, again, is going to be at the account level. If you have no program income accounts, if you have no revolving loan funds, then it's going to be just, again, the general account. In that case, again, any program income received from any activity has to be spent before program funds on all other activities. So skipping to our old friend, the error messages that we have that talk about cumulative totals not matching. One of the things that we want to just kind of reiterate is that, what's the source of the data? So if you're not familiar with this data, and, the source of the data typically is going to be the HUD form 27601, and that data is in that form is actually referenced when you have monitor exhibits, when HUD comes out and monitor you. So we've got Exhibit 22.1 for entitlement programs and 22.2. And so this is just kind of a little slide to reiterate that we're using the same data in DRGR as you're supposed to be collecting, for the individual activities. So, again, we just had recurring questions on, where am I supposed to get this data? How do I maintain it? And so this was just a little quick in reference to the source of the data. So we don't have any changes in how those cumulative total errors work, but we just kind of want to do a super quick review of them. So typically it's going to say cumulative totals don't match, and it's for race and ethnicity against income levels, and it's also going to be single family versus, housing units versus total housing units. And for all of them, you're going to have a spreadsheet. The best way to work through these issues typically is to fill out a spreadsheet. And if you don't have a copy of this, it's posted online, or you can, again, contact us at drgr_help@hud.gov. And so these sections that you would fill out to figure out what you need to put in your in-quarter totals, those in-quarter totals show here, and sometimes the issue is not, again, the totals you're putting in for the current quarter. It's that you've got an imbalance on your cumulative totals. Cumulative totals means across QPRs. So that's kind of something that confuses folks a bit. So step A is basically you're going to try to figure out what are those numbers that you're trying to achieve based on your own records, not what's showing in DRGR. What do I want the QPR to show when I fiddle it out this period? Step B is looking at your preceding QPR. So, it says here pull the report, but again, I would always urge you to actually look at the QPR itself, the prior QPR, because if you start putting in data in and you're changing it, those reports can make it hard to try to back out the information. And step C will be the calculated amount that says what is the amount that you should put in the quarter. So an example here, shows step A here is what I'm trying to get to. They've got 146 total housing units and 146 single-family units. And you can see that there's 146 households. One of the things that if you look at step B, though, is that it shows that under the last quarter, nobody reported race ethnicity. And in the last quarter, they only reported 135 housing units, but they didn't report any single-family. So typically what happens here is that someone has selected a measure in the action plan. Anytime you change your measure types, you will potentially going to get these error messages. So if you change, from total housing units to single-family housing units, or if you're starting to put in race ethnicity and you hadn't done it before, and you'd put in income levels, you might get these errors. So then what will happen is that the spreadsheet will automatically calculate these values of what you're putting in. So here you're seeing since you didn't have single family selected, there's 146 single family units you put in for this quarter because you're including prior period data, but there's only 11 housing units. So, and you're putting in 146 by race ethnicity. So it's a little confusing, but again, the spreadsheet is very helpful. It really kind of resolves, I'd say, 95% of these error messages. And if you're running into this issue, we urge you to send the spreadsheet filled out to DRGR Help with a screenshot of your prior QPR, because if you do have problems with this, it's something that's a little confusing and frustrating to work through on your own. But we really will need this information for us to help you. So finally, before we start taking general questions, we want to cover real quick what's the difference between a draw and expenditure in DRGR. In IDIS, expenditures are calculated fields, and it's basically program income dispersed and program funds dispersed. But a lot of times the overall benefit calculations, I guess, or the admin caps, things like the public service caps, those kind of things are calculated based on both of those. In DRGR, though, we've always had a separate expenditure field, and basically the way we kind of in layman's terms express this is that expended typically means what have you paid out from, program income or program funds to a third party. Funds drawn down usually is calculated by DRGR based on the draws that you make. So again, one is, money coming into your account. Drawn down is what money that's coming from Treasury into your accounts, into grantee accounts, or how much have you dispersed from your program income, how much money you've done there. So the expended is how much has a third party received. So the biggest reason we have, especially for disaster grantees, is, here is that if someone's showing a lot of draws but not the expenditures, then we would question, are people drawing in advance of need? So this is something we look to review to see, are folks drawing in advance of need? So you can look at these figures in some of the MicroStrategy reports and see if there's a big difference. If there's a problem with some, you can actually even look at the financial data by quarter and examine the differences in quarter for expenditures and draws by each quarter to see, where potentially you had a problem. But 9 times out of 10, if there is a difference in expenditures and drawdowns, it typically is someone's gone on vacation, someone else didn't realize that they were supposed to put in something separate called an expenditure. So this is just something we wanted to highlight again to make sure that folks understood the difference in DRGR, since it's a very different concept from IDIS. So folks, Jim, Janine, and Ryan, and were there any of the slides that I missed any of the points there?
No,
I think we covered.
I think you covered them all.
Okay, well, that wraps up the lecture part of our today's presentation.
So we go into the Q&As then, Mark? Does that sound good?
That sounds great.
Great. So, operator, can we remind people how to ask questions?
If you would like to ask a question, please signal by pressing the star key followed by the digit 1 on your telephone keypad. If you're using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Once again, press star 1 to ask a question. If your question has been answered, you may remove yourself from the queue by pressing star 2. And we'll pause for a moment to allow everyone the opportunity to signal for questions.
Great. And then people are also able to go ahead and write in your question using the Q&A box. Feel free to do that as well. And again, we'll give folks time to put some of their questions in. I see there's already one into the queue on the written-in question, so we'll take that one first. An individual looks like they've done some amendment to their substantial amendment and therefore had subsequent modifications they did in the DRGR, either into their plan or to the activities. And they're wanting to know, do they have to delete any previously entered information or data? Mark, do you want to grab that one?
Oh, I'm sorry. They've made a change in the amendment, and what's the nature of the change?
It doesn't talk about the nature of the change. It does say that they have made some modifications to an activity level. And I think they're trying to understand when do they use the delete button, and as well as if you make a change at the activity level, does it show any of your previously entered information, or is it all the current information? Maybe we could talk a little bit about modifications and how those look in DRGR.
Let's also talk a little bit about what's in a published plan versus what's in an amendment versus what's in DRGR. So one of the things that's important to remember is that typically in published plans, a lot of times, unless it's a small grantee, a lot of times, like for a state, it's just a method of distribution. And typically for NSP, the activities listed in a published plan are the eligible uses, how much money is by each eligible uses. In both of those cases, what is in a published plan typically is entered in DRGR at the project level. So unless you've made big changes there, for an amendment because you've moved money around or you've dropped something that wasn't successful, you wouldn't typically delete things at the project level. So one of the things that can be very confusing is that in DRGR, we might ask you, again, we ask you to identify every organization you fund, every different activity type. If it's multifamily, we ask you to identify every single complex in DRGR. So typically, unless you're dropping things, like a multifamily complex or a program that wasn't successful, you typically don't delete a whole lot in DRGR. And in order to even delete, you would actually have to zero out the budgets. And sometimes, again, if you've dispersed funds and say funds have been wired, again, that would be another one of those instances where you have to revise a draw, offset it, return the funds, and you might have to, fix draws first before you can even reduce the obligations and budgets to delete an activity. So the place you'll delete activities is on the action plan, and the only time, correct me if I'm wrong, Jim and Ryan, but the only time it'll even show up is once you've gotten to the point where you've zeroed out the activity budgets.
That is
Anybody
correct.
else on that one?
Well,
I think that's great.
So it's when oh, sorry, go ahead.
No, please.
I was just going to say, yeah, it would be once you determine that you're not going to be doing anything else with that activity and nothing was done, you zero out your budgets, then it could be deleted. And, I mean, obviously if there's anything that was completed with that activity, then that would remain, unless for some reason you'd be moving that completion or that household that you might have reported to a different activity. But everything would have to be zeroed out. There would have to be no beneficiaries, and then you could delete that activity.
Yeah, we typically see that more on the people who have been asked to restructure the activities than we do on, we've changed something in their published plan, an amendment.
Right.
Great. So the key difference here is you really need to stop and reevaluate kind of what part of if you have a published plan amendment, what part of that published plan change, and then therefore does it constitute any modifications in your action plan, your DRGR action plan and activities?
And because we get the inverse question a lot of times too, is that is every time they've made an adjustment in DRGR, do they have to go republish? And so that's typically not the case. When I think most CPD reps would actually look to make sure it's consistent, any changes in DRGR are consistent with the original published plan.
Great.
And so that the trigger would be if they're adding different activities and it's not something that was consistent with their original plan, then that kind of leaks that other direction in terms of them needing to make changes potentially to the plan, the published plan.
That's a great point. If you're adding things to your DRGR, for example, if you're saying now you're doing land banking, you never had that in your substantial amendment, you really need to double check and find out what constitutes a amendment to your substantial amendment. It has to go back out through public commenting period.
A lot of times,
because you put it in DRGR does not constitute that you've met that requirement.
Yeah, so because what's happening in a lot of cases when people are adding and changing things in DRGR, it's that they've awarded funds and it's still consistent with their plan. So it's those really big changes across eligible activity types and uses and things that would really be a red flag.
We have a question, which is a great question. We get this often. Folks that actually, there are people out there that were familiar with NSP prior to NSP. They had maybe disaster grants in there, disaster recovery grants. And so a question on kind of the combination between the two. They're saying, Was all the information presented today applicable to NSP as well as disaster recovery grants? Specifically, they said since there are some DRGR fields that were added for NSP, is there written guidance somewhere on what fields are required for each program? And the programs they're talking about are disaster versus NSP 1, 2, and 3.
Well, that's actually a great question because we didn't really actually add any fields that are not applicable to disaster recovery. So if someone's receiving program income, if someone has a revolving loan fund, those things are applicable to disaster recovery too if that's part of your program design. So a lot of the Release 7.3 was about program income management, but the things apply to disaster recovery too. So we really didn't add anything in that's super specific to NSP. One of the things we had to deal with was that when we first did our drawdown release, we were able to add program income disbursements, but we had been doing that QPR amount of program income received like we had been in the past. We tried to make it more transactional, like IDIS, where it was a receipt instead of the program income received. But again, these things apply to disaster recovery too. It's just not as common. We don't have as much money coming back in disaster recovery. If there's a revolving loan fund in a disaster recovery, then they need to use these functions. If you're selling properties, you're acquiring and disposing of properties, and you are retaining program income, you have to deal with it just like an NSP grantee would. Jim and Ryan, did you have anything else on that one?
No, that covers
Nothing from my end.
Yeah, so I don't think there's anything that's really specific to NSP. It's just way more common that this applies to NSP grantees than it is to disaster recovery grantees.
I think the one somewhat confusing thing is how some of the terminology is geared towards, this might be more for the NSP grantees, geared towards disaster because that's how it originally was set up. And I have gotten some questions about that, as far as the type of disaster and so on, just how the terminology is sort of geared towards disaster.
Yeah, so we tried to change some of those labels to just make it program funds. It used to originally say disaster recovery funds. So the biggest difference is that we accommodated in DRGR was creating separate national objectives called LH25 and LMMI for NSP. But you should only, if it's a disaster grant, you should still see the regular low mod total. If it's an NSP grant, you should see the LH25 and LMMI. So it's more of just a customization on that side.
Great. Do one more question written in, and then we'll also take some questions online. Feel free to keep getting into the queue, and we will do our best to make sure we get to all of our questions today. We have a question here saying, for single-family acquisition rehab, should you have an individual activity in DRGR for each property address, or can you have one activity for the program under that activity capture all the property addresses and beneficiary data? And again, this is for single-family acquisition and rehab. The person has a question on.
Well, the only qualifier, I guess, and Jim and Ryan, correct me if I'm wrong, is that who's the responsible organization. So if it's a small city or urban county and you're operating the program yourself, you don't have to break out each one address separately at the activity level. You would list multiple addresses. If you have, if you're an urban county or state and you've given out 12 single-family acquisition rehab grants to your local governments or other organizations, you would have to have those 12. And then the other issue on acquisition rehab is that you still do have to split LH25 and LMMI. So a lot of times you'll have split activities, so it's not usually one, because we would only see low under the LH25 split, the type of activities, and then we see the mod and above, above mod under the LMMI.
Right, so the key there is you're splitting out your activities by your responsible organization, by national objective, right? Those are the...
Yeah. Pretty much it. So, I mean, there's the national objective and responsible organization, and then you can aggregate to that level usually on the single-family rehab.
Mark, a comment. Some of the NSP1 grantees are finding that they did set it up this way where each property is a separate activity. They're regretting it now because the record-keeping burden on them is horrendous.
And that brings up a real good point, because if you create it this way, you know, I've had some CPD reps tell folks, we don't like it, it's too much work for me to review. You know, but it acts, you know, if you get really far along in your grant, you don't want to necessarily fix this, because if you've already done most of your draws, it's way more more of a problem to merge activities back in. It's a whole lot of work. So unless you're very early in your grant, you know, you don't necessarily have to fix this. It's an issue that's your prerogative. A lot of smaller grantees actually do want to show every single address separately. So it's kind of at your discretion. If it's a large grantee, I typically try to advise them not to list every activity separately, because you'll have to create a different line item in every voucher and have every single one of those approved. But you have to kind of make a judgment call once you get too far in of what's more work, you know, changing it to merge things back together or just leaving it as it is. One of the biggest issues I think that folks do forget, though, is that if they've split their acquisition activity from the rehab, you know, and say you might have is making sure, again, that you go and adjust those vouchers to make sure that the split across LH25 and LMMI is accurate. Because some people might load them all the draws originally in LMMI, and they need to remember to give themselves credit by revising some of those draws. You know, when they find out the income level of the person qualifies for LH25, you have to remember to revise the draws for those LH25 properties over to the correct activity.
That's a great point, Mark. And the only way, just to reiterate that, the only way people get credit for meeting that specific requirement of the 25% set aside is that the draws that are being pulled are from an activity that has as its national objective the drop-down is LH25. It doesn't matter if you're putting in beneficiary data and your counts show low income. It has to be the activity that specifically has as its national objective the drop-down is LH25.
Yeah, and we see a lot of grantees that when they don't know, they load the original draws for the acquisition of the property under LMMI. You know, and the reverse holds true too. You know, so it's something to remember. If you look like you're not meeting your LH25, go back and look to see, do you have the properties and the associated costs loaded to the correct activity under the split of LH25 versus LMMI. It's a real important homework.
And one great way you guys can do that is use the reports module by pulling report 7B or even the 5B, and you can see per national objective, because it does it by activity type and national objective, what you're hitting on those marks.
Yeah, so don't forget also, if you're changing those draws, make sure to double check your performance data too. Because if you're moving a bunch of draws around like that, you've got to make sure that, you know, again, that the people are loaded correctly. So, you know, the number of the households and the housing units are revised too. Otherwise, it'll look a little odd if things move only on the money side.
Okay. Operator, are there any calls that have come in?
There are no questions in the phone queue at this time. It is *1 to signal for a question.
Feel free to keep calling in or writing in your questions. We have another written in we'll take right now. Someone has a question they have is, can we revise a voucher that was already revised? And they have the example for us. They said we had a voucher of $250,000, and we made a revision to that voucher where we split that $250,000 for $150,000 that went to admin, and then $100,000 was to an activity. And they made an error. It actually should be reversed. They wanted $150,000 to go to the activity and only $100,000 to go to the admin. So how now can they fix this in DRGR?
Well, Jim and Ryan, I don't know if you've had experience with this. I haven't. I would think you would be able to. Typically what happens when you do a revised voucher, whenever you revise it to a new activity, it's going to create a different line item number. So if you only had, you know, 8 line items under a voucher and you split it to another activity, you'd end up having 9. So I think on the dollar amount, it probably would leave it under the same activity the voucher line items. Jim or Ryan, have y'all had experience with this, with the double revision?
Yeah, and the key is you can't revise the line item that says revised, because Actually, the money has been moved away from that, and that's just a shell showing you what was originally created. So you have to find the destination of where it was revised to, and then revise that one.
Exactly. I was going to say the same thing, Jim. And so where the individual says that they revised a portion of that voucher for $150,000 to admin, you got to go find that $150,000 to admin.
Correct.
You can revise that now to $100,000. You got to go find the other $100,000 that you put to that activity or that project that you wanted it to be on, and revise that now to $150,000.
That's correct.
So go find where you put where the revision went to, and revise that revision. That's obviously a little bit of a complicated one. If you're needing help, Mark, can you repeat again the email address in which you can get that support?
Yeah. So basically, send an email to drgr_help@hud.gov. And again, always take a screenshot, print screen, whatever, and send it to us and let us know where your sticking points are, or if you've got a microstrategy report you pulled. Any information like that helps us to help you a lot quicker than us having to go pull the information kind of and research it.
And one other place to get some support, you'll see here on the NSP Resource Exchange links, there's a place to request some TA. Those are for those kind of longer, bigger things. If you're really wanting to talk through, you need to collapse some activities or items like that, you can kind of talk through and get a few hours of technical assistance as well.
And if I can, I just want to make one more plug, which is on DRGR. One of the other issues that we had to deal with under the last release was the IG asked us to do a very intensive recoding of our pages to track every change to budgets and performance goals every time someone's certified. So one of the problems we've had is that we recoded the pages so extensively that we are running into errors. So I think one of the ones that we're dealing with right now is, especially on revised vouchers, not showing correctly in summary totals. If you are running into problems under Release 7.3, again, those would be ones we'd ask you for screenshots and reports too. We are getting ready to do another release coming up, and so the sooner that anybody sends any, issues that look that are DRGR defects in, the more likely we'll be able to get any fixes into this release, because the time for that is kind of quickly running out. So if you're holding on to DRGR crazy, usage issue that it never used to work this way and it's not showing correctly now, don't hold back on those.
Mark, where do they send those into?
Same place, drgr_help@hud.gov. So I just want to say it's not just I can't figure something out. If DRGR is acting crazy or crazier than normal, then please let us know about that too. Because we'll, all the documentation you send us, we'll try to figure out, well, is it something that the user's not doing correctly? But a lot of times we use that same information to send it to the developers to say, this is not working the way it's supposed to. We need help with a fix.
Great. And operator, are there any calls that have come in?
There are no questions from the phones.
So right now I'm not seeing anybody else that have written in a question. However, we want to give some time for people if they do still have some outstanding questions. We're happy to take them. Maybe in the meantime, Mark, if you're able to talk, at the report section we talked a little bit how there might be a couple updates that are coming. Are any of those updates that will be affecting grantees?
Most of the updates are going to affect the TA providers. So there might be some things that will eventually start working their way into DRGR. I'm not sure how much of it will get into DRGR. So we are going to take some preliminary steps towards data uploads. They're primarily going to affect TA requests and work plans, but we're hoping that some of them will kind of, also affect potentially at some point the ability to upload activities, QPRs, things like that. So we'll also have starting some of our, ability to upload some documents, support documents. So we're going to try to take some baby steps in our next release under the TA that might actually get some functions for, the regular grantees. Jim or Ryan, am I missing any of the other things that are going to have benefit to the regular grantees?
I think you've covered them all.
I agree.
Yeah, so we're going to try to also have it in DRGR where potentially grantees will, not the grantees, the TA providers might be able to have the ability to see some public reports about the grantee rather than having to request information from the grantee or the CPD rep. So hopefully it will be just the systems communicating a little bit better for, across folks. So another feature that I want to kind of sell that we added that we haven't really talked about, and I don't think people are taking advantage of, is that we do have the ability to have multiple profiles again. We covered this in the DRGR updates, but an example is the state of Louisiana or the state of Kansas has a local government, and the local government has DRGR accounts. We can allow the state to allow those people with other profiles with a local government account to have a profile under the state profile so that they can put in data directly. So one of the things we're going to try to do is, again, lock down, and this might be in this release too, we're trying to get it in, where that the thing that will govern that is that if the grantee identifies there's a responsible organization and it matches a current grantee, those users will only see and be able to edit the data for the activities that the primary grantee, the state, says that they are responsible for under DRGR. So they wouldn't have the ability to edit other data, other, activity profiles. So this is something that IDAS has, is the ability to have multiple profiles, and I don't know how many folks are using it on this side. But we're going to try to add some controls in Release 7.4 so that potentially folks can do this instead of local governments submitting data in spreadsheets or reports to states or from cities to urban counties. We're going to try to make it so that folks could actually allow these other lower-level profiles so that there wouldn't have to be as much data reentry in DRGR. So that's another big one that we're going to try to take steps to make folks more comfortable with the multiple profiles. So we'll try to cover that when we get those functions nailed down a little bit more. We'll try to have another webinar that includes, how do some of those functions work.
And Mark, I've had a couple questions in the past about that. One question I get often is states or the bigger urban counties are nervous to grant access to their grantees because they feel that they might then have access to draw down the funds on their own without having that oversight that the state or the urban county would want. Can you explain what type of profile that they should be asking for and that will be granted so that they can put a control on that?
Yeah, we would basically, I think what we're going to end up having is again, there's multiple profiles, and each of those profiles, say it's a state and it's allowing a local in, you can specify. I don't think we're going to allow anybody from a local, second level down to be able to approve a voucher. We are exploring the ability for them to at least submit a voucher. But then we can always have it where when you're adding those secondary profiles that you specify no draw rolls for that particular user. So if we have those, local government accounts where they're added, those users are added to a state-level account, they will be able to lock those draw rolls down and prohibit them altogether if they would like. But the main thing, again, is that, having been a grantee myself for many years, for about 11 years, other federal agencies allow folks to submit, the sub-grantees, the sub-recipients, to submit data in systems to the state one. So this is just our first steps for existing account holders for us to kind of expand those roles so there's not as much data reentry. But we are trying to make, what are those controls so that folks are comfortable with it. Again, it would be that only the primary, the state level would potentially be able to submit the QPR or the action plan. So we're looking at those different level of roles right now to make sure that they'll have as much comfort for the grantee administrators as possible.
Great. And one additional thing always to remember, whoever is the lead has, not just has the ability, has to provide they both have to recertify everyone, so they obviously have controls there, as well as they also have to assign each individual profile to a specific grant. So even if, for example, a grantee or a subgrantee might ask for an additional profile, it is still that lead grantee's ability to allow or deny that through both assigning the grantee to that profile to a specific grant or recertifying them.
Yeah, definitely the grantee administrator will have those, retain all those kind of rights. We just haven't had many folks. This was added because we had the CPD systems folks say we have this right in IDIS. Why don't we have it in DRGR? We've added it, but since we're not getting people take us up on it, we are trying to figure out, what are those additional controls that will make this a more useful function for folks.
Great. And operator, are there any additional calls that have come in?
We have no questions at this time. Again, that is *1 to signal for a question.
And Ryan and Jim, have you guys seen any kind of consistent issues that you are hearing out in the field when talking with a lot of the grantees that you do on a day-to-day basis that you'd like to bring up?
Aside from what's been covered, not really. I think the only other big issue right now that we're seeing is with receipt revisions, and there's an issue going on in the system that is actually leaving what we call a phantom amount. So if you make a revision, for example, $1,000 coming from one activity to another, and you're zeroing out that original $1,000 to put it onto another activity, DRGR is going to be, in some cases, I'm sorry, it's for receipts, is in some cases seeing that amount twice. So you'd have a $2,000 program income receipt amount when you should only have $1,000. So we're trying to get the fix, get it into the next release. Any instances where you're running into a situation where it looks like you have more program income receipted than you should have, again, just send it to DRGR_help.
Yeah, because what we'll have to do until we get that release, what we do on a recurring basis is what's called a data correction. So we have to document this fully, but anything like this will, we can still have the fixes made temporarily. So if you're going to do a bunch of receipt revisions, you might want to give us a heads up.
Right.
And we do have a question from the phones.
Thank you. Please.
We'll take our question from Adele.
And I asked for the email address once more, DRGR_help@HUD.gov.
You got it.
Okay, thank you.
We have no further questions from the phones.
We don't have any further questions in the Q&A. I think what we might be able to do, if it sounds good, Mark, if you have any other topics or ideas we'd like to discuss, happy to do so. We can also pause for a few moments and see if anybody else has any questions, so we don't want to cancel out on anybody if there are still some outstanding questions.
I guess the one thing I would like to reiterate is that we've done a series of, the DRGR webinars for quite a while now, and so again, all that material is online. It's an NSP Resource Exchange. There's the PowerPoints. There are the, transcripts, the audio. The other thing I think, we were talking about, again, is we had, over the last couple of years, we've had 2 sets of 10 trainings for NSP grantees that are DRGR clinics. And David, you can correct me if I'm wrong, but we're going to, in the next couple of months, hopefully be doing another series of DRGR trainings. And how soon to those are announced, David?
I'm not, if David's not able to answer, I've been working on this as well. So it looks like we're going to be starting in mid to late April and running through August. And I believe there was an announcement that was put out. If not, it will be coming out pretty soon. I think they mentioned it on the Q&A. I think it was on Tuesday. So the NSP team, I think they might have just orally mentioned it, but it'll be, again, starting mid-late April, ending in August, 10 locations.
Yeah, so in the last set, we did try to give priority to folks that had not been to a prior training. If you don't have the resources to go to one of the DRGR clinics, the advantage of those clinics is that we actually do computer-based exercises in addition to the PowerPoints. So we've just updated some of the training materials from last year to accommodate and include the information from Release 7.3. So that's what we'll be using. But again, if you can come to those, that's great. Otherwise, if you've got staff that you need to train up as much as possible, again, all our user guides are online. We're in the process of updating some of those to Release 7.3. And then, take advantage of all the prior ones. If you've got somebody that hasn't got any DRGR experience, there's DRGR beginner webinars on the Resource Exchange. There's intermediate. There's ones on, again, MicroStrategy. Make sure and take advantage of the materials that we've already posted online. That's my plug.
And just to follow up, that's a great plug, Mark. The training materials that will be used in these 10 trainings are also actually already up online as well. So you can go into the Learning Center on the NSP Resource Exchange, and under trainings, you'll see sections on DRGR materials, and there's things from actually huge slide decks that you can walk through for drawdowns and action plans, common questions, but also there's a separate page on math rules in case you're getting stuck on how do you figure out when something's giving you an error message that might have to do with a math rule, roles and responsibilities per profile, et cetera. So please, please, please use that Learning Center, as Mark was saying.
And let me also mention one other issue. We have had a change in our help desk and the materials, the FAQ materials that are online. So just so you know, the folks that answer the email potentially are different than the folks that answer the DRGR, the phone line. So we've got new contractors on the phone. Typically, the DRGR help emails come to Debbie Key if it's a user account issue, Jim and Ryan, especially if it's a general usage. So the other issue that we are working on right now is making sure that all of our FAQ posted online are going to be updated. So if you've looked at the DRGR FAQ, they have changed in terms of the way they look and feel is. I think they used to be hosted by Lockheed Martin. Now it's, I think, Sage has re-hosted them and re-platformed them. But the HUD staff here, we're going to be actually reviewing them to make sure they're all completely up to date for Release 7.3 since there's so many major changes. So if you see something on the FAQ or you get advice that sounds like it's a lot of work, please double check with us, under the DRGR_help@HUD.gov before you go to town, making any edits or changes. So, those questions that we got about restructuring activities, those are kind of an example of kind of get a second opinion. Before you spend a huge amount of time making huge changes in DRGR based on you saw an FAQ or based on, you got guidance from someone, please double check, with your CPD rep, of course, and with us at the DRGR_help@HUD.gov align before you spend hours upon hours and hours of making changes in DRGR. Again, the other one that is the biggest one that we'd like to help with is if you're having trouble with making those adjustments to the activity budgets and obligations and projects, you're getting stumped, and you're really just stuck, pull those spreadsheets, try to come up with your best guess of what you think those budget increases are going to be in a spreadsheet beforehand. When you get stuck, that's the kind of material, again, you send to us, and then we'll try to walk you through any sticking points.
We have a couple more questions that have popped up on the Q&A log. I think we'll go to those if that sounds good. The individual that asked a little bit before about what's the difference with respect to NSP versus the disaster recovery grants, trying to understand a little bit more about the fields that are required. They asked a follow-up specifically about the NSP fields regarding green building. This would be things before the last DRGR release, obviously, but still wanting to know the applicability of that on NSP versus disaster.
Well, that's a great question because that is something that is is it NSP2, Ryan and Jim, that it's required?
Yes, it is.
Yeah,
2 and 3.
It's NSP2 and 3.
Yeah, so that's that's something. So even NSP1 and disaster recovery is not something that was required. You know, if you don't have the information, we don't want you to make stuff up. You know, but there are some grantees that would want to report that, you know, but it is not required for the other appropriations. So that one is even NSP versus non-NSP. It's specific to those individual appropriations.
Great.
That's a great example, you're right, of things that are very custom.
We have additional questions. Someone's asking about where do we get some of these cumulative spreadsheets that they're seeing? And I'm going to just pop up one or two of them we've seen here on back in the slide deck, slide 9 or slide 10, which is the program income, or slide 11, which is Funding Report 5B. Where do they find these, Mark?
So those are all going to be in the MicroStrategy Reports tab. So basically, MicroStrategy Reports is the same data that's in DRGR. It's just pulled out in a spreadsheet. So the cumulative reports are especially helpful to see where are we way off, if there's a big difference. So in the cumulative ones, like right here that you're seeing 5B, and also I guess was it, Brian, and it's 8, the 8 series financial report 8, activity level financial reports.
Right.
This is real helpful, these kind of things where you can actually see at the activity level, you know, an obligation and grant funds dispersed and program income received and dispersed. You can actually pull that out then and use that to troubleshoot where you need to make adjustments on for available balances, because you can create a column that says difference between obligations, total obligations minus total disbursements. So those cumulative ones really help you figure out overall sometimes what actions do I need to take. If you run into problems with financial or performance data where you're not sure why the differences are so big, it always helps to run the financial or performance reports that are by quarter. So that data might show that, oh my goodness, you know, back 2 quarters ago, I forgot to report expenditures on every single one of my activities. Or I've only reported expenditures on 3 of my 5 programs, and it's across all quarters. So, you know, when you're troubleshooting, again, this helps you look at what's the data in your system and compare it to the data in DRGR. And again, it's in the Reports tab. It's a separate interface that pops up. And the basic groupings, again, are admin reports, which are the status of accounts and grants, financial reports, and performance reports. Anything else, Brian and Jim, on reports that is especially helpful?
Well, we can remind them that they can, once they find a report that they find particularly useful, they can subscribe to it on a weekly or monthly basis. So then
yeah, that's a great thing. So if you're not around, you can have those reports pulled, and they should stay, I think, for 120 days, where you can pull that old archived data up. And the other one, again, is that I think Ryan covered in the last one, is that if you don't like the sort order, or if you want to group it differently, you can save that custom format into a thing called My Reports.
And Janine, do we have the MicroStrategy webinar up yet that we did last week?
Yes, we do. We did a webinar last week on the entire functionality of the reports module to help people get to these reports as well as to modify them. And that was on the 6th, if I'm thinking correctly, the 6th of March, and that is on the NSP Resource Exchange under the Learning Center. If you look at webinars and past webinars, you'll be able to pull that data, the transcript, as well as the slide deck and the audio. Someone's asking a bit about beneficiary information. They're wanting to review how to report beneficiary information in DRGR. And they have a specific question. So, for example, a 2 or 3 unit property for NSP finance either a loan loss reserve or acquisition only. Is beneficiary information reflective of only the homeowner or households in each of the additional rental units?
Well, as a general rule, you know, I'm not good with, you know, I can't speak to the loan loss reserves, but as a general rule, you know, the beneficiary data, when it's entered in, say we've got a multifamily complex, usually you're reporting only the in-quarter, you know, income level and race ethnicity. of people as they're coming into a multifamily complex. And so you're not, one of the things to remember is you're not sending a snapshot in of what is the composition of the complex every quarter, because if you do that, then the data ends up doubling and tripling and quadrupling. So one of the things folks get into real problems with is when they do those, when they put in the in-quarter data, they put cumulative totals instead. But the other issue becomes, folks feel like they need to back things out and add them in as the demographics change. And I don't think that's the way it's advised to do. Jim and Ryan, do you have more on that one?
Oh, reading the question, I think we have to go back to when you report any beneficiaries, and it's when you meet your national objective. So if you have a 3-unit property, even I would say even if it was funded through just only acquisition or a loan loss reserve, if you're meeting your national objective when you, through your households, the income levels of your households that are moving into that property, you would report on the unit and the household when they move into the property.
Yeah, but we don't usually have stuff. We don't usually back it out if the folks move out and stuff. If it's multifamily.
Well, it's not we're talking about a 2 or 3 unit property, not a multifamily. So,
well, rental. I'm talking about rental, sorry, instead of multifamily.
Right. No, well, I mean it's on initial occupancy. So.
Right. But I get that a lot where we have folks backing folks out on rentals.
Well, I mean, again, they would only. Yeah. Sorry. Go ahead, Jeannie.
There's a point to drive home here is that you only do an initial occupancy, and that it matters if it's a direct benefit or an area benefit. So if you have a property that's needing a direct benefit, then you do every unit that is being financed by NSP.
Well, this is Jim. Also, I think it goes back to ultimately NSP funding is CDBG funding, which has a requirement of initial occupancy reporting requirements. Unlike home, where you have continued occupancy reporting requirements. I think that's where the confusion comes in.
I also think the question is asking, so if we have a 2 or 3 unit where there's a homeowner who purchases a property and then has 2 additional income generating rental units, and then I would say that you'd be reporting on those rental units only if they're going to be included in your NSP program and only if they are going to be, there would be a deed that restricts the income level and everything. So again, you would only be reporting the homeowner upon purchase of the property. And then if you're going to be including those rental units, you would. It's a great question, but I think because they're income restricted, you would probably be reporting all 3 units at the same time.
Based on their occupancy.
Yeah, I was going to say at the same time as
it's sort of it's a nuanced question, and the question is sort of leaving out a little bit of information that we would need in order to answer it thoroughly. So if you want to write it up and send it in, we could take a look at it a little bit more in depth. But just typically speaking, it depends on whether or not those rental units are included in your NSP program or not. And they don't have to be.
Depending on how the financing structure worked.
Financing structure and whether or not they're deed restricted and they're income restricted.
We have another question here too. We've been entering expenditures in the QPR. Is there another place where the data should be entered to keep it current?
On expenditures?
Correct.
Yeah, no, the only place on expenditures where it is entered is on the QPR. The key thing, again, is to look at those MicroStrategy reports or look at the QPR to look at those cumulative totals. Because you might have a little adjustment here or there within where an expenditure might hit right before or after the start of a quarter. But in general, the cumulative totals between expenditures and all the draws really should line up, in the QPRs, and then in the reports they'll tend to drift a bit because the expenditures will be closest at the point of where the QPR at the end date of the QPR. So, but those things need to be especially aligned on those QPRs. So The only place to enter the data on the expenditures of the QPRs. It's just a little confusing once those things start drifting, figuring out how do I fix it. And so if you do have adjustments, you don't have to necessarily submit, unapprove all the old QPRs. You can make an adjustment within the current quarter if you get that off balance to include a prior period. And if you do that, again, we always recommend that you make a note in the progress narrative of the activity saying this much of the expenditures was for this current period, and the following amount is for the prior periods of, this period to that period. But that is one of the areas where you can get the most drift and the most confusion is, how do I correct expenditures once the cumulative totals start looking wrong?
Great. And we have an additional question here. Can we edit our project budgets, or do we need to submit a revised action plan? We're not changing the activities, just how much we spend on each one.
Well, I guess from the question, it sounds like there's a little bit of confusion between what's a project and an activity. Because again, in a published plan, what typically we see is listed as an activity there is actually a project in DRGR. And sometimes what people call projects is actually an activity in DRGR. So again, I think Jim and Ryan and David and John would correct me, but basically the general rule of thumb is you look to see is something consistent with what was published in the original action plan. If it diverges in terms of the money across the programs that you've listed, or there's a new activity type, or you're dropping one, then you'd have to start worrying about the citizen participation issues. So kind of have to look at, how do you run a report and look at the totals of the information in DRGR and compare it to those published plans. Because a lot of times, especially in a larger community, the published plan is going to be very high level in terms of the types of things they're funding and the dollar amounts, whereas the DRGR, what's called an action plan in the system, is very detailed and granular. Anything else, guys? Jim, Ryan?
Well, you also have to look at the entity's consolidated plan and what their own threshold is for a substantial amendment.
So look in the citizen participation plan?
Right.
Right. Oftentimes I'll defer questions like this to the field office. They usually have the best information to give the grantees as far as what's expected of them locally.
Yeah, so there's not other than just saying look at the consistency, you have to meet the criteria you've set out, and you kind of worked through your CPD rep.
Great. Operator, are there any calls that are on the line?
Yes, we have a question from Sherry.
Hello, Sherry.
Actually, I would like to expand on what we were just visiting about on the requirement to submit your action plan for approval by your CPD rep.
Okay.
If we change, like say we increase a budget on a house, on an activity, and you had an approved action plan, once you increase that budget on that activity, on DRGR, it comes back that your action plan has been modified. So we need to submit that for approval before we can submit our QPR, correct?
Yeah, I guess that's making a distinction between something that's a published plan and amendment versus what we were talking about before was more about the published plan. What you're talking about now is the DRGR action plan, yeah.
Right.
So definitely there has to be a reapproval before the next QPR.
Okay. Are there any hints or anything that you can give us so that we can prevent or try to get around some of that? Because when you have multiple activities with multiple subgrantees, you could be submitting your action plan weekly for approval if you wanted to.
Well, again, that's one of the reasons we try to talk about aggregating activities and not listing property-specific activities. A lot of grantees, they're saying this is how much we're going to spend single-family LH25 versus LMMI, and again, estimating as much of the program income in advance so that you don't have those constant ongoing budget changes. If you are going to go down to the address level, then every time you add an address, yes, you're going to have to do these things. So And again, that's one of the reasons you would set it up at the aggregate level, if at all possible, because that's going to affect not only your draws, but like you're saying, how many times you have to submit the action plans in DRGR for approval.
Yeah, and unfortunately, we were told to set it up like that. So,
so the only thing you can do is try to, get those, make sure obviously that the things are in as quickly as possible. Not as quickly, but create a production cycle and letting folks know. And the only things we always say to expedite the reviews is to say to your CPD rep, here's the only things we've changed is we've added X activities, or we've changed these budgets. That way they don't have to look through with a fine-tooth comb what are all the changes. The more you narrow the focus, hopefully, the quicker you can help expedite the review.
Yeah, I keep a log for the quarter and submit it once a quarter. So.
Yeah, that's the best thing because we have just now, you used to not even be able to tell a change. When an action plan was changed, a budget, it would change all the old QPRs and you couldn't tell what the old changes are. So part of that audit trail we talked about from Release 7.3 is now the QPRs will show, if you made a change this quarter for a budget, for an existing activity, the old QPR should show the old budget and the new QPR should show the old shows the old, the new shows the revised budget. So we are having to track a lot more of that, but it's still not real evident to the CPD rep just to look at it off the top of their head. Who wants to look at and compare, print out two reports and compare them. So, yeah, that's all we can do is try to expedite the stuff.
Okay, thanks.
Sure.
Once again, to ask a question, please signal by pressing *1. We have no further questions in the telephone queue.
Great. I don't see any more writing questions in the queue either. Anything else we need to be expanding on, Mark, on any of these questions that have come in?
I don't think so. I think that's pretty much it.
And before we close today, why don't we just hold for a couple of minutes, if people don't mind, just in case you have any questions out there. I still want to make sure we are able to answer all of your questions. So we will hold just for a couple of moments until, and if you have any questions, feel free to write them in or go ahead and hit *1 and operator let us know. And for now, we'll just stay quiet unless you guys, Mark or Ryan or Jim, have any other comments.
Hey, Janine, this is Hunter.
Please.
I'd just like to sort of talk about what's going to be coming up over the next few weeks in the webinar world. Next week we're going to have, there's actually going to be no webinars, a little webinar vacation, if you will. But starting March 27th, we're going to have the first of two of NDC's underwriting webinars, and that is in preparation for the NDC courses, the advanced courses that we're offering over the next few months. The first one's going to be on March 27th, and the second one of those two is going to be on April 24th. But then we have sort of a new and exciting thing that's going to be coming up, which is we're going to have a series of webinars dealing with the same issue, and that is entitled What Now? Marketing, Disposition, and Other Strategies to Dispose of NSP Inventory, or as John Laswick likes to call it, Dispomania. And the first one is going to be March 29th, which will be an opening and a discussion of marketing and disposition. So we'll go over some of the disposition rules and regulations, as well as talking about some marketing strategies. The next webinar will be on April 5th, which is part of this series, and that will deal with scattered site rental. Again, rules and regulations, strategies for scattered site rental. April 10th, we'll focus on land banking. That's actually a subject we've not covered before in the webinar series, so we're looking forward to talking about it. And then April 17th, we're going to finish up our Dispomania series with a best practices peer-to-peer and expert roundtable. And that'll be an opportunity to have some grantees that have had some success with disposing of NSP inventory come talk, as well as some experts from the previous webinars. So we're really looking forward to that, and hope you all can join us.
I just like to hear Dispomania. That's a great title.
We do have a question from the phones.
Please.
Take our question from Jennifer.
Hi. I just had a quick question in regards to in particular NSP1 production report that came out, I believe, today. The actual and projected unit counts that are listed in each of the four graphs or charts, the projected data, was that pulled from the action plan and the actual from the quarterly reports, is my first question. And then secondly, is the data that's reflected to date information, or is it just for a particular quarter?
Okay, so to your first question, yes, action plan is where the projected data are pulled from, and the QPR would be where the actual are pulled from.
Okay.
And the data that you're seeing are number of households. You can. There's obviously you're inputting for direct benefit activities, number of housing units, and number of households. We're using households because we found that grantees were typically reporting on households accurately, meaning that they're reporting the number of households when a household moves in, whereas they might have been reporting the number of housing units when the housing unit was completed.
Okay.
So that's to your first question. Your second question, it's cumulative, so it's up through the quarter. All the information that we pulled out of DRGR through the quarter that the report was published with, not just the quarter data.
Okay, great. And are these going to be issued quarterly?
Yes, quarterly.
Okay. All right, great. Thank you very much.
You're welcome.
And maybe to let people know what Jennifer's question is around, if you have not seen the listserv announcement that came out, there, if you go into the NSP Resource Exchange, one of the drop-down is grantees, and there's a new series called the production reports you can click on, and these reports contain cumulative data on the units by household, as Ryan said, that are being assisted with NSP funds, and they look at a variety of different data sets within that, and you can see these as summary reports or by state production reports. So feel free to check those out, and those are new onto the NSP Resource Exchange. Under the Grantees tab, you'll see now production reports as a sub-tab that you're able to click on, and you get into that page and be able to pull that.
I just also want to mention that number of households is used for the home ownership assistance, new construction, and rehab. But for the demolitions, we're using number of properties. It's just an analysis that we did that looked at what's most likely being reported most correctly, most accurately, and we found the number of properties was for demolition.
So another reason why it's essential and imperative that you enter your data into DRGR, not just so that you're communicating to your field offices, they're reviewing and approving it, but also, as you'll see here, that this information gets rolled up and is able to tell not just your personal story and as you as a grantee on what you're doing in NSP, but also gets to tell the entire state, region, and country kind of what has been the effects, the positive effects of NSP.
And I want to make a plug, too, for our public reports in MicroStrategy, too. So those are wonderful performance reports, I think, that include financial information. If you want to pull very easy, high-level, project and activity category reports, the financial, how much money has been spent to date versus the balance, or spending across categories across time, don't forget that, there's in the public reports part of the MicroStrategy tool, there are those reports you can pull real quick and easy PDFs that if you need to give it to your county commissioners or city council members, a quick snapshot of, what are your spending trends and, where are you, in terms of your overall progress. You can pull those kind of reports too to supplement those other production reports. So hopefully, all of those things would be quick, easy ways to pull these nice, kind of more sophisticated looking tables and charts and graphs where you're not actually having to pull data out and actually create these yourself.
Great, and to put a plug in from that March 6th reports module webinar that was held, it has a whole section on how to do those public reports. So feel free to check that out if that's something new to you and you're able to get some information on how to. We have nothing else in the box. Operator, are there any other callers in?
Yes, we have a question from Connie.
Hi.
Connie.
Hi, how are you? If we have a specific question that we'd like to get answered, I don't have it right now, but just for future, who would be our best contact person?
Well, again, it's the DRGR_help at HUD.gov. You know, because that we all that comes to us here at HUD, and we actually look through it, and then we try to figure out who's the best resource, you know, for it based on what the topic is and who has the time to run things to ground for you.
Okay. Thank you.
Thank you. Any other questions in the queue, operator?
No, there are no further questions from the phone queue.
Thank you. Well, I leave this to Mark, Ryan, Jim, Hunter. Do you guys feel that we should end this early, or do we want to stay online for a few more minutes and see if there's any other questions that come in?
Well, we've done this DRGR for a few times. I'd say we could run this one early, end of this one early.
So as always, there's tons of information out there, though, so you can go back to these multiple, as Marcus said, DRGR webinars in the past, from reports to all the information on the 7.3 release. You can also go into the Learning Center on NSP Resource Exchange under trainings and get a full multi